Good evening, everyone. I'm Tejas Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Brandman Retail Limited. Today, we'll provide a brief overview of the company and its innovative business model. Brandman Retail Limited is a fast growing retail and distribution platform for premium international brands in India and operates across multiple sales channels, including exclusive brand outlets, multi brand outlets under the trademark sneakers, e commerce marketplaces, and its own website. From the management team, we have with us Mr. Arun Malhotra, promoter, managing director, and chairman of the company. Good evening, sir. Welcome. We also have Mr. Saket Prakash, Chief Financial Officer of the company. Good evening. Welcome.
Good evening. Very good evening.
From Ratex Corporate Services Limited, we have with us Ms. Payal Gandhi. Good evening. Welcome.
Good evening.
Now I hand over to Arun sir to tell us the journey of the company. Over to you, sir. Arun sir. Hello. Am I audible? Hello, Arun sir. Saket sir, do you want to take it? Until then, we'll just check. Hello. Arun sir, am I
Yeah,
audible to you?
Tejas, go ahead. Yeah,
Yes,
Tejas,
sir.
I can hear you now. Go ahead.
Please tell us the journey of the company, sir, and then we'll start with the PPT.
Okay, good evening, everyone. Thank you for coming over. We started this company about 4 years ago in COVID. We have been in the brand representation business for over 30 years. I have the experience of representing brands for over 40 years, 30 years now. We started this company about 4 years ago. Brandman Retail is based on four pillars, and the pillars are retail, they are licensing, they are uh, B2B, and also e-commerce. Sakeji, you need to mute. I can't. I am hearing a lot of echo from your side. Thank you. So yeah, so based on four pillars, and in the various pillars we have various brands. So we can safely say that we have all the categories, all the licensing agreements with all the brands for a very long period of time, which are based on exclusive agreements, and some are non-exclusive agreements, but tied to various sections of India. So, in the licensing business, we have Rockport, where we have a 10-year contract for India subcontinent. And for New Balance, we have North India. We have about 15, 16 stores, which are called monobrand stores or EBOs. And then we have multi-brand stores where we have Anta, Saucony, Solomon, Wilson. And then we have three brands from outside, which are Adidas, and we have five stores of those. Have all brands that I just mentioned except for Adidas, Asics, and Puma. So this is our journey, and we can go through a presentation which Tejas has ready.
Yes, sir. We'll now start with the company presentation. Arun sir, can you please walk us through the presentation?
Yes, of course. So the numbers immediately last year, our numbers. No, this is numbers for December end. Yeah, so December end we've closed at 97 crores top line and a PAT of 19 crores. So that's approximately 20%. And it tells you the number of outlets, which is 18 outlets in total, 14 New Balance and 4 MBOs, the sneaker stores that I was talking about. Next slide, please. So yeah, so this talks about the brands which I just mentioned. Like it mentions New Balance here, where we have the mono brand stores. On running is Season -1, Season -2, where we sell online, and we do the B2B, where we supply to multi-brand stores like Foot Locker, or to our own stores, which is the sneaker stores. And then we have Anta, we have Wilson, we have Saucony and Solomon, where we have the entire distribution, where we do everything. So we do all three verticals. We do online, we do offline, we do B2B, we do everything. Rockport is the licensing brand. The sneaker stores have Adidas, Asics, and Puma. So that explains what all we do in each of these brands. Next slide, please. So this is a little bit about myself. 30 years of experience in the brand representation business, and now focused on Brandman retail for the last 4 years. Next slide, please. So this is my board. We have Saket on the call right now. He's our CFO. We have Mrs. Shukla, which is bringing in the legal and the expertise on compliances. We have Kashika, who brings on board the culture of sneakers in terms of what is recycled and sustainability. My wife Kavya brings in a lot of retail. There's Paul Silvertown, who brings in the brand representation business. Philippe also brings in brands which are hot in the market or not. He's based out of Switzerland. Silvertown is based out of Canada. And that's my board. Next slide, please. So these are the various points what we did in the last 4 years. We've gone through it already, and it tells you little milestones that we have achieved. Next slide, please. So our vision and mission is obviously to be the #1 provider of athlete leisure in this space, and to be the #1 destination, and to be different from all the other franchisee distributors that exist in the market. Next slide. So this gives you the locations of where the monobrand stores are, which is the EBOs we call them, and the multi-brand store sneakers where we are, and the online portals that we sell to. So this gives you the cities and the little bit of pictures of what our stores look like. Next slide, please. So yeah, so these are the 4 pillars I've spoken. And this further elaborates what we do in sneakers, the brands that we have. In the EBOs, we only have New Balance right now, but we will be opening up stores of Anta and Saucony and Solomon and Wilson as we progress. The online portals where we sell to, licensing business of Rockport. So it just gives you an idea of what we do and how we do it, and how the 4 pillars are existing. Next. So yeah, this gives you an idea of the growth of the size of the market. Internationally, the market is about, the slide is pretty slow, but pretty small for my eyesight, but it tells me about 300 billion. And I believe the next slide will tell you it's about 20 odd billion in India. So we are just a tip of the iceberg on the numbers that we're doing. And there's a great potential that we see in the market for this industry. Next slide, please. Yeah, so this is India market, as I spoke about 20 odd billion. Next slide. So yeah, so this is actually not relevant, but it just gives you an idea where we are positioned and what's the average selling price of the brands that we represent. It gives you other brands which we don't do, but it just gives you an idea of what they are and what they don't do. Next slide, please.
Arun sir, you are on mute.
Yeah, yeah. So we spoke about these numbers already. Um, again, it's kind of small, but I'll put on my glasses. So yeah, so
Sir,
top line 96.
there's there's the option to full screen, right corner of your slide. So
Thank
you're
you,
on mute.
Tejas. That helps a lot. Yeah, that helps a lot. So yeah, so 95 top line and 19.7 is the PAT. Next slide, please. So this is just an idea to give you about BIS, what BIS is about. We had a little bit of a disruption in 2024 where all shoes were required to be BIS compliant. The good news is that all our brands and all our manufacturing partners are BIS compliant now. So it's just to give you an idea, one of the hurdles that we had to face in the past. Next slide. So these are EBITDA margins compared to our peers. It gives you an idea that the EBITDA margin may be a little bit less than Metro Brands, our competitor, not competitor, but nearest comparison. But our PAT is a little bit higher than them because we're a little thinner. We have less hierarchy. We are concentrating on delivering better margins than the rest of our peers. Next slide, please. So yeah, I spoke about my team when I introduced the team. I spoke about the access to global brands. I spoke about just now the asset light and scalable business model. Omni distribution we spoke about when we spoke about the online business. And COCO stores and key markets is what we spoke about when we said that we are opening retail stores and monobrand stores. Next slide. Yeah, so these are just the numbers that are there, projected achieved numbers of March 31st, 2025. Yeah, so this just gives you a little bit more in terms of cash flow, in terms of assets and equity and liabilities, gives you more depth into our numbers. Next slide, please. So these are the awards that we got, and I guess that's the end of the presentation. I'm open to questions, whatever you may have.
Thank you. Thank you so much, sir. We'll start with the Q&A session. I request all participants to post your questions in the comment box. We have our first question from Ms. Vibha. Can you explain your core revenue streams and which parts of the business generate repeat revenues versus one-time sales? Arun sir? Arun
Can
sir,
I had
you're
a
on.
little internet connection? Yeah.
Okay.
Can you explain your core revenue streams and which parts of the business generate repeat revenues versus one-time sales? One-time sales we don't really have. We are retailers, so we are there. Customers come back to look at other products as well. So core revenue is right now a lot of our business is the B2B business, but we strive by the end of 2027 to have more than 65-70% of our business in retail.
Thank you for answering that, sir. Next question, please. Mr. Gukesh, what are the key factors actually driving demand for your products today? And these drivers remain intact over the next few years?
Yes, so the key factors are demand for athlete leisure, to have great brands and great shoes, and to be in the right environment to be able to get to know the story of the brand. And we see this growing, and we see ourselves being able to cater to the demands of the customer.
Thank you, sir. Next question, please. Ms. Apeksha, how do you see your positioning evolving as competition increases? What specifically differentiates customer buying decisions?
So differentiation is a compatibility towards the brand, association towards the brand, and obviously technology. What brand uses what technology in the product that they're exhibiting and showing, and that is why we're adding on new brands. Earlier, if you see, our numbers were dependent on New Balance, but we now came out with the On Running, which contributed a lot more, and now we're coming up with Anta, Wilson, Solomon, and Saucony, which is going to add more and more, and they're going to then average out. Next question.
Thank you, sir. Next question, please. Mr. Sanjay, what prevents customers from switching to product at lower prices?
There's no prevention, sir. It is up to the brand and up to the customer when they decide that they want to switch a brand. But in my experience of brand representation, I feel that people are more uh, when they like a brand, then they stick to a brand. If a person has one New Balance, I believe that once he buys one New Balance, he'll end up buying at least three more. Next question.
Thank you. Next question, please. Mr. Pavan, which part of your value chain
The B2B business contributes most to the profitability as of now, but as I said, we will be striving to make retail much stronger. Right now it's at 40%. We strive to make it about 65% in retail.
Thank you. Next question, please. Vaidehi, which part of your value chain contributes to
I just answered the same question. It is B2B right now, but we strive to have retail contribute much more.
any plan to open on cloud?
No, we are not opening any on cloud EBOs as yet. We are only online and catering to the multi-brand stores.
Thank you. Next question, please. Mr. Rishi, are there any business segments you operate in today that are strategically important but currently drag overall margins?
Not as of right now, and I don't see this happening in the future as well.
Thank you. Next question, please. Mr. Ravi, how dependent is your business on specific regions or markets, and what risks does the concentration create?
It's not I'm sorry, it's not dependent on regions or markets. It was earlier dependent on one brand, but as we expanded to On Running, which became our second brand, and we have four more brands coming in, so it's now going to be well sorted out. So no more eggs in one basket, which were 2.5 years ago. Next question.
Next, please. Mr. Prajwal, how defensible is your cocoa-led model against
As we scale, we will be getting franchisees to do sneaker stores. Yeah, the EBOs will remain Coco, but the multi-brand stores will become franchisee also. Next question.
Thank you. Next, please. Mr. Pradnesh, what proportion of your current store footprint is in
That's a great question. Right now we're in Guwahati. We're just starting out our journey in second tier, third tier cities, and that is our goal, to target these second tier, third tier cities with our multi-brand store concept. So we'll be having at least 35 to 40% contribution of our retail coming from second tier, third tier cities in the next 1 year.
Thank you, sir. Next question, please. Mr. Pravneet, how scalable is
We
this?
plan to have So the sneakers multi-brand format, we plan to have 50 stores by the end of 2027. So it's a scalable business as we go into second tier, third tier cities.
Thank you. Next question, please. Ms. Kavita, what were the main drivers
What were the
behind
main
your
drivers
in
behind
the
your
last three financial years?
last two financial years?
It was the B2B outright business to online portals like Agio and Flipkart, but we're driving that to become minimal and get retail to be more concentrated.
Next question, please. Mr. Veer, margins have moved over time. What cost items have the biggest influence on profitability?
Scalability, as we scale, our margins have increased, and as we scale further, it's going to get better as we scale some more. And on running has contributed a lot much more than New Balance.
Thank you. Next question, please. Ms. Aruna, how much of your cost base is fixed versus variable, especially as you scale operations?
Fixed is rentals and other stuff. Capex is also fixed. So the costs are fixed. Scalable versus variable. Variable cost is inventory. Inventory comes in, goes out. So that becomes that is a variable cost that we have.
Thank you. Next question, please. Mr. Saurabh, do you deal only in footwear or other accessories and sports apparels as well?
We deal in everything: footwear, accessories, and sports apparel as well.
Thank you. Next question,
Thank
please.
you. Next question, please.
Mr. Jayesh, how closely do
Mr. Jayesh,
operating
how closely do
reported profits
reported
and when
profit
do
and
mismatches
when do
usually arise?
mismatches usually arise?
How closely do operating cash flows track reported profits, and where do mismatch usually happen? I don't understand the question. Can you elaborate what you're trying to ask here, please? Because
Mr. Jayesh,
cash flow is a turnaround. Are you asking me how do we turn around cash? It usually takes 60 to 90 days. Is that the question?
Mr. Jayesh, could you please elaborate your
Mr. Jayesh,
question?
could you please
Until then, let's take
until
our
then
next
let's take
question.
our next.
Mr. Neeraj, what has
Mr.
driven
Neeraj, what has
these
driven these
and net worth pure
and
operating
net
profit
worth pure operating
related
profit
actions?
related actions?
So on running has driven our operating profit, and as I said, scalability also has increased our profit.
Thank you. Next question, please. Mr. Balbir, what internal factors could most influence margin movement as the business scales
As
and
the
how are
business
these
scales and how
managed?
are these managed?
Basically, I would say that the rupee valuation will affect our business, but we are hedging it, so we are in a good position. Moving on.
Next question, please. Mr. Bhaskar, how resilient are your financials
Are your
if revenue
financials
grows or remains flat
We
for a
have
bit?
we have four new brands which we're just about to launch, which is Wilson and Solomon and Sakuni. So that'll drive the growth, and that'll be amazing for the next 3 to 4 years.
Thank you. Next question, please. Mr. Panveer, what drove the strong revenue growth in FY24 compared to FY23,
Compared to
and what
FY23
factors led
and
to
what factors
relatively
led
lower
to
growth in FY25
relatively
compared to FY20?
compared to FY20?
So in 24 we got on, so that was the strong revenue growth, and then 25, end of 24, early 25 was the BIS issue that I told you about. So that was a little hiccup there. So those are the two factors. Next question, please.
Next question, Mr.
Next
Sandeep.
question, Mr.
Sales were
Sandeep.
impacted
Sales were impacted
AI's
various
implementation. What was the
implementation. What
quantified
was the
revenue
quantified
impact during
revenue
this period?
impact during the period?
As I said, BIS did affect us, but we are now or everything is BIS compliant, so we're back on track, and we have delivered some great numbers end of the third quarter. So if you look at the third quarter numbers, which we just showed you, it's a top line of about 95 crores and about 19 crores of PAT. So we're back on track and we're ready to, go further in terms of the other brands that we're launching. Next question.
Thank you. Next, please. Ms. Amisha, how involved are the
100%, 100% involved. We are 100% involved. We are looking at getting a CEO on board very soon, and that would then take me to a position where I'm into business relationship with the brands to make sure that the brands are being represented correctly and to drive new expansion plans for the company. Next question.
Thank you. Next question, please. Mr. Sudhir, how has working capital intensity changed as your store network expanded?
Intensity has changed for the better, actually, as we've expanded. We needed capital to expand, but we've done much better as we've grown and we've got more sales coming in. Next question, please.
Thank you. Next question, please. Next question. How often does
Oh, we have a weekly review, so we're very hands-on.
Thank you, sir. Next
Next
question,
question.
please. Next question, please. Stinku, are there any ongoing?
No, nothing.
Ongoing?
Nothing at all.
Next question, please. Next question, please. Ms. Nisha, what specific experiences ventures
The ability to be able to identify brands that are going to get hot and are going to be most desired in the coming years. That's the experience that I've brought into this company. Next question.
Next, please. Mr. Subodh, how actively involved are independent directors in operational and strategic decision making?
We meet every month with Paul and Philippe, and they're able to guide us as to what brands are doing well overseas and what is it that we're doing wrong that we should be doing correctly. So it's a fairly hands-on approach. Next question.
Next, please. Dia, how sensitive are your margins to change in input costs?
Right now, we don't have any sensitivity at all. The only thing that can happen is that if the rupee goes to 100 against the dollar, then we may have a problem. But until then, we're all good to go. Next question, please.
Next, please. Shreya, how do you manage working capital stress during periods of rapid growth or slower collections?
That's when we turn from our retail side, we turn to our online side and try to sell product on an outright basis to companies like Agio and Flipkart. So we have our ways of looking at. That's why we have various verticals and various pillars of the company. Next question, please.
Please. Mr. Anil, what are the biggest execution risks as you scale operations from current levels?
I would say the biggest execution risk would be control, but we're putting in systems in place and processes in place which will take care of these risks. Thank you.
Next question, please. What challenges do you foresee when expanding into new markets or channels?
New markets, to understand the market correctly, then only we enter. We have a fairly vigorous understanding as to how we enter the market and what we do. So we're fairly experienced and we have the right team in place that takes care of these challenges. Next question.
Next, please. Mukesh, if one key risk were to play out adversely, which would have the largest effect of the company's operations on the company's operations?
I don't see anything, but just to say something, I would say that as I said, if the rupee goes to 100, then maybe a problem. Otherwise, there's no such problem at all.
Next question, please. How do you manage fashion obsolescence risk, especially in premium footwear?
The brands are able. We have various. We do end of season sale. We have factory outlets in which we sell models which are not selling through or cut sizes. So we manage this very well. Overall, we don't discount at all, only during end of season sale or at these factory outlets that we have. And that's the way that we move forward. Next question.
Next, please. With all
Yes,
With
properties,
all properties of
all
how sen-
properties are on lease. These are
house
fairly long leases, so rentals don't increase until every 3 or 4 years. So I don't think it's that sensitive to margins, and it's not really that high. And then the size of the market also increases every 3 years. So I don't see it's really that bad. Next question.
Thank you. Next, please. By
whether
Panmeet, what is your
Panjit,
current
what is your current
room do you have
room do you have
in
So
capacity?
as I said, we're planning to open up 50 odd stores by end of 2027, and that is where we are targeting, and that's where all the energies are going towards. Thank you. Next question.
Next, please. Aruna, how do you prioritize growth deepening existing market versus entering new ones?
I think entering new markets, as I said, second tier, third tier cities are something that I'm looking at because the middle class there is improving and expanding and exploding. So I want to take advantage of that. So that's where we're going right now. Next question.
Next, please. Are there any operational bottlenecks today that could
next
slow down
today that could
expansion
slow
plan?
down funds.
I think availability of stores at the right place at the right time. That's the only bottleneck that I see. But there's enough opportunities in India is very vast, and we are concentrating on East India, which is an untapped market right now.
Next question, please. Stara, what gives you confidence that the company can execute growth plans better than it has
Than it
historically?
has historically.
Because of the new brands that we've added, we see this doing very well for us. Next question.
Next, please. Diljit, can your centralized warehousing scale efficiently as store count
As warehousing
increases?
efficiently as store count increases.
Yes, it can. Thank you. Next question.
Next, please. What share of revenue currently comes from online and
Currently comes from
About
online and
when we say online, it's about online includes two formats. One is the marketplace, and one is the outright business, which we could like to call B2B. That's about 60%, and our D2C, which is our retail business, is about 40%. We are expanding our retail in a very big way, and in the next 1 year, you will see that our retail is about 65%, and our online B2B and outright will be about 35%. Thank you. Next question.
Next, please. Explain the B2B export channel.
B2B export channel is when we get opportunities to sell product which is unsellable here, which is cut sizes or which is having season -1, season -2, and that's when we are able to take advantage of this channel. Next question.
Next, please. Harshal, what key operational KPIs does management track at the store and company level?
Well, KPIs at the store level is obviously what is the conversion rate that we look at, how many people visited the store and how many people actually bought it, and that's what we track, and then we try to identify as to why the gentleman or the lady did not pick up a piece, and that is very crucial for us because we are very different from other franchisees or distributors. We invest a lot of money into education, into training, and that's what brings that what makes Brandman Retail different from the rest of the people. Next question.
Next, please. How sensitive is valuation to normalization of EBITDA under different accounting treatments?
Accounting treatments, we are looking at EBITDA, and that's the way that we are doing our accounting. Any other accounting is in SME, I don't think is valid, so that's why. Next question.
Next, please. Mr. Pawan, how resilient is your supply chain during
Resilient
peak
is your
demand?
supply chain during peak
We're
demand.
we're very strong in our merchandising team, and that's why we're able to plan well in advance, and we know what our peak demands periods are, and we are very well versed and equipped to handle this. Next question.
1 or 2 years from now, what would you consider successful outcome for public shareholders?
I would like to see the company cross a top line of in 3 years 500 crores. Next question, please.
Next question. Ms. Anjali, what will post-issue liquidity and free float look like for public shareholders?
This, I believe, Greatex can answer this question much better than I can.
Ms. Payal, you're on mute.
The post
I
money valuation is three. Can you hear me?
Yes, yes, you're audible. Please go ahead.
So the post money valuation is approximately 325 CR with a PE of 12.35.
Okay. Can we have our next question, please? Ms. Dia, what is the expected EPS impact from planned store additions post IPO? Ms. Payal, you are on mute. Ms. Payal,
Can we get back to you for this, like the EPS impact for this one?
sure. Can we have our next question? Could you provide a granular breakdown of our revenue by brand and segment? Specifically, I am interested in which areas
I am
are
interested in which
currently driving
areas
growth.
are currently driving growth.
We're launching. So on running has been a major both top line and bottom line for us. And as we expand into Sakuni and the other brands, they will be driving the growth forward. So what is centric right now is New Balance, but then On Running came in and took over, and now the other brands will also take over as we grow further. Next question, please.
Next, please. Shreya, what criteria are used to select
What
premium
criteria
locations?
are used to select premium locations?
Yeah, so
High
it's
rental and
basically our adjacencies and target consumer is what we're looking at, and that is the criteria to select locations. Next question, please.
next, please. How does the post-issue capital structure improve the company's ability to generate returns?
We are investing into retail, so retail is going to be generating a lot of the business, and that is what is going to generate the returns for our shareholders. Next question, please.
Next, please. With rapid EBO and MBO expansion planned, how will execution quality and brand consistency be maintained?
We are brand representatives. The brand is manufacturing. The brand is taking consider of quality. We don't make the brands. We are distributors and retailers of the brands. So and they are Anta is a $35 billion company. New Balance is a $8 billion company. So I'm sure they have enough product to supply to us for our expansion. Thank you. Next question.
Next question, please. How will the company ensure that every major capital allocation decision post?
We as I said, we are ensuring that we were concentrating on retail, and that is what our growth will come from. Next question, please.
What is the margin profile across four verticals and across brands like On and New Balance?
Well, I mean to say, On Running is the most profitable one. New Balance is the second most profitable one, and the others we're about to launch. So we'll be able to report those numbers and give you details on that. But as I said, right now the B2B business is contributing about 60 odd percent. Retail is 40%. We look to reverse that, and that'll be achieved in 1 year. Thank you. Next question.
Next, please. How dependent is revenue currently on brand?
Kavita just answered that question where I said that from New Balance we are now expanding. As I told you in 2024, 2025, On Running came on board, so that has contributed quite a bit. And then the other four brands which I mentioned are going to be taking over, and then we'll be less dependent. We won't have all our eggs in one basket. Next question, please.
Next, please. What margin impact do new brand partnerships have
There's no margin impact. The margins are fairly the same, so you should be expecting immense growth as we proceed further. Next question.
Next. What are the IPO objects and how will it
Objects are to obviously open retail, as I've been saying, and retail is where the growth is going to come from. Next question, please.
how scalable is the sneakers
Yes. I already answered this question. 50 stores by the end of 2027 for sneakers. And unit economics versus EBOs is mostly the same. The cost of doing an EBO or MBO is the same. And I see the MBO business growing fast or faster, and then the EBOs also catching up. So it's going to be a great retail journey over the next 2 years. Next question, please.
Next, please. What are the expected returns from airport and premium mall locations given higher operating costs?
The premium locations give us more visibility, they give us more customers, and they have more disposable income, so they are able to give us higher returns. So, in fact, I've seen the higher the more premium the location is, the more sales we are being able to achieve. Next question, please.
How does the company balance inventory risk while expanding across multiple brands and formats?
As I mentioned before, inventory risks are limited, and whatever cut sizes we have, we go on end of season sale, and then we have factory outlets where we then sell our products. Next question, please.
Please. What contribution is e-commerce expected to make the overall
35 to 40%. Next question, please.
Next, please. Achal, how do B2B partnerships differ in margins and working capital intensity versus direct to customer sales?
Retail obviously is more capital incentive because we are investing in capex. We're giving an SD to the landlord, and then we are selling one piece at a time to each individual who's walking into the store. The B2B is a bulk business where goods come in. Okay, they're sold on a credit line, but you're able to turn around money much faster and in larger volumes. Next question, please.
Next, please. What steps are being taken to avoid channel conflict between EBOs, MBOs, and online platforms?
The conflict actually does not exist between EBOs and MBOs because it's a different format and different locations, and selection of the store locations are decided by that. And as far as online and retail offline is concerned, the assortment and the silhouettes and the models that we select for online are different and for offline are different. Next question, please.
Please. How sustainable is the recent reduction in advertising and marketing spend without impacting brand visibility?
The brand has actually, New Balance has just opened up their own subsidiary in India, so they're investing heavily in advertising and marketing, and that's why you see us having a reduction in our advertising and marketing. So it's the brand now who's doing it and not us. Next question, please.
Please, Mr. Yash, following that, what strategic levers are being pulled to convert this top line momentum into improved margins while simultaneously de risking against customer or segment concentration?
Yash, can you just elaborate a little bit to where we were earlier? Because I took 4 questions or 5 questions after I answered your question. So, can you just redo your question again for me, please? I'll really be obliged. And I'll wait for it, not a problem.
Sure.
Tejas, we have more time, right? How much? We have 3 more minutes,
Yes.
is it?
Yes, sir.
Yes.
Until
Yes.
then, let's take the next
Until
question.
next question.
What are the
Skirti,
key
what are
executions in launching
What
multi-brand?
are
multi-brand
So yeah,
partnerships?
partnerships?
multi-brand partnerships are there's no risk as such. Licensing arrangements, yes, they are risk because you're giving a minimum guarantee of the royalty that we're doing. So with Rockport, there is a little bit of risk, but we have kept the minimum guarantee of the royalty very low compared to the size of the market and the expectation of the market. So, and we have a great relationship with the brand owner, and we feel that Rockport is going to be propelling our growth over the next 5 years, is going to be one of our key winners that we'll report back to you once we meet again. Next question, please.
Please. What is the minimum acceptable store level EBITDA margin before you shut down or relocate a store?
Shut down or relocate us.
So you're looking at about 25, 28% PAT of 20%, and if it's below that, then we don't shut down. We probably convert that into a partial outlet store and a partial A store. So we then bring in the cut sizes or the season minus one, season minus two product, and that helps us with inventory management as well. Next question, please.
Amisha says all the
Thank you, Amisha. That's very kind of you, Amisha. Thank you, Rahul. That's very kind of you as
we
well.
have
Thank
covered.
you, Rajesh. It's very kind of you. I wanted to go back to that gentleman who had the question.
Yes.
I
So
forgot his name.
what we can do is I'll
If he's still there, can you ask him? He had a question which I wanted him to elaborate.
sure.
I'm willing
Yes,
to
sir.
spend time. Ah, there he is. Yash. Yeah. Hi, Yash. Yeah, Yash, your earlier question was, could you provide a grant? I replied to that. Okay. And then your next question was? Following what strategic levers are pulled to convert this top line momentum into improved margins? Okay, I understood now. So basically, what we're doing is that we're trying to bring in a better assortment of product. So we're not trying to risk by keeping all our eggs in New Balance. So that's why we have Anta, and Anta owns 3 brands. Anta is a $35 billion company, and they just bought Puma actually. They bought 28% of Puma 2 weeks ago. So, and Puma in India does 3,600 crores of turnover. So it's a great group to be associated with. Anta by itself, the Anta brand is very exciting. I'm super excited about this brand, and it's going to do really well. And then with the Wilson tennis racket and the pro shops that we are opening in Gurgaon. The first one next month is going to be very exciting. And then we have the French brand, which is owned by Anta, called Solomon, which is also very exciting. So I think we're de-risking by keeping an assortment of brands over varied target consumer, and that's what the customer concentration is not just on one particular brand. I hope, Yash, I've been able to answer your question. And thank you very much for these very intelligent questions.
Thank you so
Tejas, are
much.
we done? Thank you so much.
Thank you, Saket sir. Thank you,
Thank you,
Paya.
Saket sir. Thank you,
Thank you,
Payal.
Payal. Thank you,
Thank
Tejas.
you. Thank you, everyone.
Thanks,
Thank
Saket
you.
sir.
Thank you,
Bye-bye.
everyone.
Thank you so much. Thank you,
Bye,
everyone.
guys.
Then,